So by now, you've probably been seeing the headlines about banks that are failing here in America. So I'm going to give you a couple of tips on how to protect your money just in case your bank fails.
Welcome to the Homeowner Prep podcast, where every week we educate and encourage aspiring homeowners to help them buy their first home faster. If you aspire to own a home, you're in the right place, so enjoy. Do us a favor and leave a review, a rating, and be sure to subscribe. Now let's get to this week's episode. Hey, real quick before we start, I want to ask you a question. How long are you going to wait before you decide to get started? I mean, you want to buy a house and you're earning income, so what's holding you back? Visit our website at homeownerprep.com/start. You can take an online assessment and set up a free 30-minute call, and we're going to put a plan together to help you get from where you are to where you truly want to be. So don't let fear hold you back from buying your first home. All right, now back to the episode.
Hello and welcome to another episode of the Homeowner Prep podcast. I'm your host, Eric Helon, and on today's episode, we're going to be talking about bank failures. There have been some banks that have been failing recently here in America, and they've been making the headlines. And so it's got a lot of people worried about their money and how to protect it. So I'm going to give you a couple of quick tips that you can use to protect your money just in case your bank happens to fail. The first thing to understand is that these banks that are failing are typically investment banks, meaning they're investing in a lot of startup businesses. They're Silicon Valley based businesses. And so they're looking at really riskier investments. And so they're taking those deposits and that money that they have from their clients and their customers, and they're using that to make some pretty risky investments. And so you have to understand that most banks have a coverage, a balance, and certain rules and regulations to say they can only invest a certain percentage of money in these types of investments. And some of your bigger name banks typically are not going to be as risky with your money. They have a lot more money to cover it just in case. So the first tip is to bank with a bigger bank. I know there are a lot of people who have some bad blood with big name banks, but you should invest with bigger banks or credit unions in order to protect your money, because they're just not taking on the same risk and they're more protected with the regulations that they have as far as what they can invest in and how much money they're allowed to invest with. The second thing you can do is to make sure that you don't deposit more than $250,000 into an account. That's because that's how much the FDIC will actually protect and actually insure. So if you put more than that amount in the bank, there's no guarantees that you're going to get that money back. Now, recently, we've been seeing that the government has been stepping in. They have said that they will protect and insure any deposit amount. But truth be told, the taxpayers are going to have to pay for that. And so you just want to make sure that if you're looking to really protect your money and really insure that money to make sure that it is protected, I wouldn't deposit more than $250,000 into one account. If you have more than that, you should definitely be talking to an investment banker about different types of accounts that you can use in order to better protect your money. The third key that I have is actually the biggest point of all. We've been seeing that the issue with these banks failing is the fact that people are afraid. They're scared, they're going to withdraw their money, and then the bank can't cover those withdrawals and keep the legal regulated amount on the books. So that's why these banks are failing. When you look at it, this is a customer-driven problem. So I would say as a third point is to be calm, to relax. Your bank is okay. Now, if you're frightened about your bank not being able to sustain itself and you go out just like a lot of other customers and withdraw money from that bank, you will cause the bank to fail. So really take a look at the situation and ask yourself, is my bank okay? Am I okay? Because at the end of the day, you do not want to go out and cause your bank to fail and cause more issues for you and the community around you. If you're truly worried about your money, take my advice. Don't put more than $250,000 into the account. Bank with bigger banks or credit unions who are not making risky investments, and really just, stay calm. If you have questions about banking or your relationship with your bank, definitely don't hesitate to reach out to us. We can answer those questions for you. If you're looking to get started with Homeowner Prep, if you're thinking about buying your first home and you want to make sure that you have the savings and the bank accounts needed in order to do so, feel free to get started with us by texting the word START to 619-848-3700. Or you can visit us on our website at homeownerprep.com/start. There you can get started with a simple download of an ebook, taking our online assessment, or if you're truly ready to go, we can connect you with a local real estate agent or lender in your area. For quick questions about a unique situation or scenario, feel free to reach out to us on social media. You can find us on all social media platforms, and we tend to get the majority of our questions on our Instagram account at Homeowner Prep. I hope you got some valuable information from today's episode. I definitely look forward to providing you with some more great information on the next episode. And until then, be blessed.
If you've enjoyed this show and got some great value from it, please be sure to rate and review. And if you're checking it out on YouTube, please be sure to subscribe. That really does help us to continue the show and bring in some great guests to help you on your home buying journey.